Welcome to the channel. Starting your own business in South Africa can be incredibly exciting, but it comes with its challenges. If you're thinking of using a personal loan to fund your startup, you've come to the right place. In this video, we'll take you through everything you need to know, the process, the risks, and whether it's the right move for you. Let's get into it. First up, why would someone choose a personal loan to start a business? Well, many South Africans, especially first-time entrepreneurs, may not qualify for business loans. This is where personal loans come in handy. Here's why. Unlike traditional business loans, personal loans don't require an extensive business history or collateral. As long as you have a good credit score, you might qualify for one. With personal loans, there are no strict rules about how the funds must be used. Whether you need the money for inventory, equipment, or rent, a personal loan gives you that flexibility. Approval for personal loans is usually quicker compared to business loans, meaning you can get your hands on the funds and start your business without too much waiting. So, how do you go about using a personal loan for your business in South Africa? Let me walk you through the steps. Before you even think about a loan, make sure your business idea is solid. Write up a business plan. This will help you understand how much money you need and how soon your business will be able to generate profits. Not all personal loans are created equal. Compare options from various banks, online lenders, and even mobile banking services like Capitec or Time Bank. Look for low interest rates and favorable repayment terms. Your credit score plays a huge role in whether you'll get approved and at what rate. In South Africa, a credit score above 600 is generally considered good. You can check your score through platforms like TransUnion. Once you've chosen the best option, apply for the loan. Be ready to provide proof of income, banking statements, and your ID. If approved, the funds will be deposited directly into your account. A loan is only beneficial if you can repay it. Make sure you understand the monthly installments and create a budget for your business that includes loan repayment from day one. Now, let's get into the risks. While personal loans can be a good option, they come with their own set of challenges. Here are some of the major risks to consider. Personal loans tend to have higher interest rates than business loans. In South Africa, personal loan rates can range anywhere from 10% to 27% per year. If your business doesn't grow fast enough, the interest can quickly eat into your profits. Unlike equity financing, where investors take on some of the risk, with a personal loan, the burden of repayment falls entirely on you. Even if your business fails, you still have to repay the loan. This could damage your personal credit and leave you in debt. Personal loans usually have a limit, often capped at around 250,000 rand. If your business requires more capital, you may struggle to scale it effectively. Plus, if you take a smaller loan and use it all up front, you might run out of cash before your business takes off. Since this is a personal loan, it impacts your personal finances. If your business doesn't generate income quickly, you could find yourself struggling to pay personal expenses, like rent or car payments, on top of your business costs. If a personal loan seems too risky, consider some alternatives. Although harder to get, business loans are usually cheaper and designed with businesses in mind. Financial institutions like Nedbank or Standard Bank offer small business loans. If you have a high-growth idea, look for angel investors or venture capital. This is riskier in terms of ownership, but you won't have the pressure of loan repayment. Check out funding options like the Department of Trade and Industries grants or the Small Enterprise Finance Agency, SEFA, for entrepreneurs. Starting a business is always a risk, and using a personal loan to fund it adds another layer of complexity. But with proper planning, it can be a viable way to kickstart your dream. Just make sure you weigh the risks carefully before diving in. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell. Let us know in the comments if you have any questions about business financing. Best of luck with your entrepreneurial journey.